guys, April 16, 2019. It's a Tuesday. We're going to take a closer look at the 13 market moves daily, what happened yesterday on the 15th, and what we're expecting to happen today and tomorrow. So the top observations are going to be possible beginning of a reversal in financials. Number two, semiconductor stocks showing signs of weakness here. We're finally seeing NVIDIA selling off second consecutive day in a row, which could lead to a setup where we have, if the financials are reversing and the technology stocks are reversing, it would be a perfect entry to short the markets as they're working themselves actually slightly higher again today, this morning. So number three is cloud stocks are also confirming the weakness. We're going to take a closer look at the chart of Workday in just a sec. For possible trades for today, Johnson & Johnson, BLK, JB Hunt, and number five, we're actually seeing the first big day down yesterday in the Chinese stocks. So clearly some investors are getting concerned and they're taking money off the table here. That is likely to continue. And with that being said, it may be a good time if these stocks pop, if the Chinese stocks pop on low volume. That would be a great entry to add to the position or initiate the position. Here's the chart of NVIDIA. So as bullish as it's been, right, all the way up till last 3 days. So this was just a kind of a neutral day right here, even though it's a red candle. Second red candle, third red candle in a row. It's actually catching a downgrade. Finally, from one of the analysts in the prior video a few days ago, we mentioned this level of 170. Surprise, surprise, the analyst yesterday said that it's downgrading and revisiting the target price for NVIDIA. At what price? Exactly $170. How did we know that 3 days ago? Guys, we didn't, but the charts don't lie. So stay focused, stay with the process, and you will be able to get more trades right than wrong. Now, the next observation is Workday. This is as good of a textbook example as it comes of a multi-top formation. Now, this is a quadratop at this point, and signs of weakness, as you noticed the last few days when it actually tried to make its last move higher, as it often happens before the big drop happens. It was happening on relatively lower volume on the way higher in relation to all this sell-off volumes that I've got highlighted by these blue dots right here. And so yesterday is remarkable because even though the candle don't look that huge, especially in relation to these red candles prior, but the volume is significant. So again, at the top, we're seeing banks coming in and taking the position. So how low can this thing go? Easily 170, 165 bucks in the near term, like next few weeks. What's happening with the earnings season? Some observations we made, they did materialize. The correlation trade worked out perfectly. Congratulations to those of you guys that took the trade yesterday. TLRY was our recommendation based of noticing what APHA was doing pre-market. Some observations we're going to cover in the Citigroup and some other financials in just a second. Now, this is what we're focusing on today, guys. These are the stocks that are announcing earnings today. Pre-market, these are the stocks announcing earnings. After market, your homework, as always, is to look up the charts. And guys, when we say look up the charts, use the information in the charts, divergence scores, to really go through with a fine comb and try to identify what are you seeing on the daily chart? What are you seeing on the weekly chart? What are some of the observations that you're making? And then just try to compare with some of the observations that we're trying to present here. Okay, now let's take a closer look at why we think the bearish reversal in financials is likely to continue. So this is shares of Citigroup we're doing yesterday right after the earnings. As you can see, we have a resemblance of a move to type behavior. So initially the stock spikes higher, then sells off and regains some equilibrium by the close of the day. Now observe this move right here, guys. This has got every characteristic of a move too. Let's take a look at Goldman Sachs shares, okay? Goldman Sachs shares after earnings announcement yesterday. Look at this. Same pattern, right? They go higher, hit a level of 211.14, and then where do they end up the day? At 199.77. Now, the interesting observation, as in any move too, there are times intraday where it's going to look like the stock is reversing, right? Like, look at this run from 202 to 206, and then it drops again, tries to make another run at 202 and falls again. So, definite move too in Goldman Sachs shares after the earnings announcement. Bearish move, M&T Bank. Again, same characteristic, just like with Citigroup, just like with Goldman Sachs. It's a move two, guys. Move two is a bearish move. It is a sign of a top. As you can see, here's MTB announcing earnings. Initially goes slightly higher, then sells off, tries to regain some equilibrium, and finishes the day closer to the lows of the day. Now, the first day of a reversal is noticed in JP Morgan. So after hitting these critical levels of 111, it finally sells off to a level that actually sold off to 109, but did not finish at the low of the day. Finished closer to the 109.90 level. So, but we do observe, just like in some prior instances where it's hitting some of these levels, it does begin to sell off. So congratulations. I know even some of the guys that are not subscribed, they were able to lock in some pretty solid gains in this JP Morgan trade. If you were getting into it Friday, just by watching the YouTube video, I mean, you should have been able, if you took action, to capitalize at least a few $1,000 on this trade, of course, depending on your position size. So congratulations those to you guys that did and implemented and executed the trade well. Now, the first reversal day in PNC is also observed after the bullish move higher on Friday. As you can see, the behavior is identical to that of JP Morgan. Now, I do have a slight concern because it is fallen on lower volume in relation to the bigger move on Friday. So, very crucial, especially to those of you guys just that took the PNC trade. Today is very critical day. It's going to be either a money-making day or it's going to be time to close some part of this position. Ultimately, we want PNC to hit a level of 130 and not bounce higher off of it. We want it to actually close at some point today below the 130 level, which is going to be incredibly important because we've been buying the 130 puts, the 131 puts, 129, 127 puts. So this move of reversal today, day two of this reversal move, is significantly critical if you own these contracts right here, guys. So pay very close attention to the following things. We have two stocks that are announcing earnings, and one is actually a target for our next trade, which is BLK. The other stock that's announcing earnings today is BAC. And, we are just observing this because we want to see if the predominant move is going to be confirmed in BAC. So far, out of all the stocks, so far we had 5 major stocks that reported earnings, guys. And out of the 5 stocks, the predominant move so far is move 2, which again is a signal of the top and bearish behavior. Now, especially important to observe this reversal and the bearish behavior, even though things again look bullish this morning. If you're looking at your screen, there's a lot of stocks that are in the green. Now, they are in the green, but in super low volume, which is bearish in itself, as the market's hitting these critical high levels, almost revisiting the prior all-time highs. We're noticing that these financials are running into some major levels of resistance. So if that is to continue, and if we notice BLK and BAC sell off, then the predominant behavior will be such that any financial stock reporting earnings after today, if this predominant behavior in the financials is confirmed, it is likely to continue sell off after the pop higher. So we can make a pretty solid conclusion after observing these two stocks today. If this reverse any future stock that is reporting in the financial sector, it would be a high probability trade to take in a fashion that you would short it once it bounces and you collect the profits after closing the position after 2 or 3 days. holding the position because they are likely to move lower. Now, BLK, let's take a look closer at the chart. This is what we're seeing. Clearly, there's some divergences developing here. The stock is continually selling, going lower on higher volume in relation to the up volume, and we're definitely seeing some pressure on the accumulation distribution starting to come in, especially at these levels here. If we're to take a look at the weekly chart, that's definitely, we're in a severe downtrend that started almost 13 months ago, and we're reaching this level here. Looks like a very attractive target to come in and short. Now, here's what we actually observing. Now, this data, guys, is from early morning, right after BLK announced earnings. We're not noticing any crazy moves to the downside or the upside, even though looking at my screen here, you see it did hit a low of 449. Now, if you're looking at your screen now, before the market opens, it may look slightly different, but basically there's no overreaction to the upside or the downside, which is great, because if you studied the Trading Like a Rockstar course that focuses on trading earnings and idea generation for your future trades, it does tell you some of these instances, the options are going to take quite a bit of a depreciation when the market opens. So there could be some really lucrative trade put together here. Again, what I would be looking to do is to see if the initial spike higher, let's say to this level of 455 or 457, is going to take on very low volume. I would not be looking to immediately jump in, but I would probably be leaning towards observing this trade for about 30 minutes. And if we're seeing that JP Morgan is dropping back below 110, if we see that PNC is actually hitting the 130 level and trying to work its way below that after the 30 minutes into the market open, then, if we're not seeing a spike in Goldman Sachs. So basically, if you're looking to put on this trade, my recommendation would be make sure you're running all the charts of all the stocks that have already reported earnings in the financials, which would be, of course, JP Morgan, Wells Fargo, and Bank of America. I'm going to take a closer look at that and just see if the entire sector is pivoting from moving upside. If it's reversing and starting to move lower, this would be a high probability trade, because out of all the charts, actually, this particular chart in BLK, and what I mean is the combination between your weekly chart and your daily chart, when you combine the two, it makes for a very strong bearish case. So I like this trade. I wouldn't come in, though, and try to short it unless we observe in the second day of reversal of some of the other stocks like JP Morgan that announced good earnings, right? They didn't talk a whole lot about their forward-looking projections. I think if they did focus on that, the stock probably would have fallen. But nonetheless, if we see the strongest stock, which currently is JP Morgan, selling off second day in a row today, this trade will make a lot of sense. And in that case, we're targeting maybe 2-3% move in BLK lower. Now, 2% move would be $9. 3% move in this thing would be like $12. So if you're getting in at these level of 457, we're targeting a reversal to 452 plus another $12, which would put us at 440. So basically, here's your trade. If you're observing the reversal between 10 and 10.15 in the financial sector, if it is confirmed and they hesitate to move higher, and the volume is very light to the upside, and you're seeing the reversal, you want to short it at this level right here, 457. You want to buy 455 puts, and you want to close them when BLK trades down to about 440 level roughly. Now we say 440, like be careful when you run the 1 day, 1 minute chart and see, let's say if it gets close to 441 and it hesitates to break lower 1, 2, 3 times, then make sure that you don't wait till it's trying to hit 440, like close it at 441. All right, so here's the observation on Bank of America. Bank of America chart is super bearish. You got a multi-top formation with multiple divergences between the price action and other factors that we're observing, such as volume and the RSI and so on. Now, the predominant behavior, again, as we have calculated it, is such that initially the financials are moving higher. followed by a reversal and a sell-off, even in the strongest stocks like JP Morgan. So this is exactly what Bank of America is doing so far. Now, if you actually taken a closer look at the earnings, we'll stock outside of the charts for just a brief moment. It's all of the banks besides JP Morgan, they're beating the earnings, like as far as the earnings per share criteria, but they are all missing the revenue number. And so if sales slow down, then that's definitely not a great environment for institutional investors to keep coming in and buying the stocks. Slow growth in revenue ultimately will impact the earnings per share. And just remember this, institutional investors, they don't buy stocks just to, keep them for a day or two. They buy them because they're analyzing the fundamentals and they're trying to stay in the position for 6 months to a year. So if the revenues for the banks are likely to continue, especially now that they have the pressures of lower interest rates, it's just not a good environment for institutions to come in and put substantial investments here in the financial sector. So when you take a look at the charts and some underlying criteria of the way the financial stocks have been reporting earnings, they all miss on revenue. And that's the story with Bank of America. That's why I'm talking about it in detail. Bank of America beat on earnings, missed on revenue, and that is just kind of the story of these earnings season so far. We've seen a lot of companies beat on earnings per share, but they miss on the revenue number. And that is ultimately not the reason to own the stocks. That's the reason to sell. So pay very close attention by 10:15 a.m. if Bank of America will reverse. Now, it's got very strong resistance level at around 150. So the probability, again, that it's going to break above 31 is maybe 5-10%. The probability is going to drop from here is about 90%. The bottom line is this. We will find out today if JP Morgan was an exception in the financials sector this season. If Bank of America and BLK sell off after initial pop higher, you can simply use this strategy on any financial stock that is due to report earnings next. We're looking at possibly shorting J&J after earnings. Now, why would you do that? You may say, they're saying it's such a great bargain right now. Well, the charts point that, especially if we look at the weekly chart, gives us a much bigger picture that maybe it's not as great of a bargain as everybody says it is, because what we're observing is institutions are getting out of this stock. There's major divergences developing all over the place here. Let's take a look, however, what the stock is doing pre-market around 6:30 this morning. It's hitting this levels of about 138.34. I like this setup because overall the chart is bearish. Overall, the biotechnology healthcare sector is bearish going into the election season here. They typically, these companies do not do well. So considering all these things, I think this is a great entry to short. And depending exactly where it trades at about 9:30 when the market's open, we're likely to consider not buying calls but buying puts on this name right here. So double top in CSX. Now we're taking a closer look at the transportation sector, and CSX has been rather bullish over the course of the last 6 months. So the chart, however, shows that there is a possible double top. As you can see, preceding these double top, this is very interesting observation, guys. I hope you can see this, that preceding this move higher, you've had two huge formations of days or sequence of days where the stock was selling off. Institutional investors were getting out on super strong volume. So that does not prevent the stock from moving higher temporarily, but that tells us that the big move lower is in the works. Now, it's important to maybe tune in and listen to the earnings call of CSX because it's a good measurement of how the economy is doing overall. And, transportation sector typically tells us the biggest story of what's happening in the economy overall. Now, CSX after the earnings report this morning is slightly higher, just barely higher so far. If you're looking at these charts at 9,930, you can see a different picture here, but initially move higher on lower volume. So pretty much any stock that we're looking at today, the predominant behavior is they are moving higher on lower volume, which is bearish. So if you're tempted to buy calls, be extra careful right now. Let's take a look at UNH, which is healthcare, right? So healthcare, super bearish chart on UNH, and you may be thinking, well, geez, look at this thing. Leonard, it's probably too late to short UNH, don't you think? I mean, look, from 285 all the way to 225. Yes, I agree. If we take a closer look here, I mean, clearly the bigger move is overdone already. The next level that it could drop to, however, is this 210 level, right, set up by the prior support right here. Last time I dropped here to the 210 level, it bounced, creating the double bottom right here last year. However, this right here, guys, we cannot ignore this. I mean, look at these huge volumes. Look how many people are taking the money out of this thing, and I'm not sure if we're done here. In other words, I don't think this thing is going to move substantially higher and sustain the move higher until we hit this 210 level. So there is a trade that we are considering in UNH because we are thinking that looking at the accumulation, there's plenty more people that could come in and take the money out of this stock. And so, surprise, surprise, it is up on low volume per market, hitting this level of 236. So this could be a good trade right here, guys. That is probably my favorite for the day, is this UNH. If it moves higher, especially to like 238, 240 level, you've got a probability it could actually drop all the way to 210 if the reversal comes in. Now, just because we're thinking it can drop all the way to 210, it does not necessarily mean you should be buying like 215 puts, guys, okay? The strategy is such, the VIX remains super low. You should be buying calls in the money or near the money. So in this case, if it opens, let's say at 238, then buy 240 puts, buy 235 puts, but please do not go and buy the 220 puts. Yes, they're going to be very, very cheaply priced, but it does not mean that those puts will make the money, guys. So in the money, near the money puts on UNH after a pop higher. Let's review this J.B. Hunt. That's another transportation stock. So actually, earnings report was pretty horrible. And if you've taken the Rockstar course, then you guys know some of the correlation quiz questions that are in this course trying to help you understand the correlations is there's two particular sectors that we recommend shorting in case of the higher fuel prices. And so clearly the trucking industry would be one, the airline industry would be the other one, and a lot of things unfortunately are priced in. We're expecting for a pop in the stock and a move higher so we can actually come in and buy puts. Unfortunately, this is what it's doing pre-market. It is dropping. So guys, charts don't lie. We were talking yesterday about this head and shoulders pattern. The stock is down pre-market about $5. Not a huge move, right? Looks like somebody was trying to buy a couple hundred shares here, but I think currently, as I'm recording this, it's trading right about 101. So the question is, now that we didn't get the move higher initially, everything else that we discovered yesterday was pointing to a move lower, and that's why we were hoping it will bounce, let us have an opportunity to buy these puts at a better price. But the question is, what do you do now? So again, I would not trade necessarily the first 30 minutes. I would try to make some good observations. Now, if you see the huge volume coming in right at the open, I would jump at the open with a smaller position on this, because the next support level is literally in the low 90s, 92, 94 bucks. So it could actually get to that level within the next 72 hours. So again, if you see huge volume coming in right at the open, jump in, buy this 100 or 102, 105 puts. Again, try to buy in the money and target the area of about 93, 94 bucks over the course of the next 72 hours, so it is going to be a swing trade, guys. Now, ideally, I would like to see a pop higher. Notice this gap that was created pre-market. I would like for it to get to as close as possible to closing this gap, and that's where I would like to come in and initiate the short position. So ideally, I'm still hoping for a bounce and then the reversal. Remember, guys, it really pays to short the stocks when they're moving higher, not lower. Beware, make sure you do not short stocks at the intraday lows. Now, let's cover the market moves now. At this point, guys, I want to send a shout out to Michael, who's actually a new subscriber, but clearly done some good investigative studying on the 13 markets move. And so he's actually nailed this move 12 yesterday before I did. So great job, Michael. And guys, this is just proves the point that it's not about Leonardo trading, it's about the system. If you study the system, you can arrive at the same conclusions that I arrive at, and you can put some tremendous trades together. So move 12, what does it mean? Move 12 is when the market opens up slightly lower, maybe a point or two, and it works its way lower, sets the low for the day, and bounces to pretty much the same level in the day where it started. If you want to be creative, you can draw a little smiley face here. This is the way I'd like to think about them. Now, the important observation is some move 12s are more bullish than some of the other ones. And not in this particular case, because we're noticing that while the stocks are moving higher, the accumulation distribution continues lower, which is clear divergency. So it does not mean we cannot get another move higher, but it does tell us that the reversal is near. So move 12, again, we started at this 29.10 level. We closed roughly at a 29.10 level, but throughout the day, the stocks had this move lower, set the double bottom, and reversed on insignificant volume. Now, the 2-day sequence is 7-12, which if you look at these things together, they look almost identical, right? So 7-12, look at this 7, look at this 12. If you're curious what the difference is, guys, for whatever reason you're subscribed, but you have not taken the 13 market moves formula course, take it. It's 6 hours of specific details on how to read this and how to make sense of this so you can identify these highly profitable trades on your own. Now, the 5-day sequence is 3, 10, 5, 7, 12. So we get consecutively 4 bullish moves in a row. Guys, very simple way to think about this is markets do not move higher consistently without catching a break at some point. So the more bullish days we have, the higher the probability of a move lower. So the probability that on the 5th day we're going to get a move higher again is less than the probability of getting a bullish move on the 4th day or the 3rd day. Now, it does not mean that we're automatically going to drop on day 5, because clearly in some instances markets are able to move 8 days higher in a row, 9 days higher, 15 days higher in a row. That has happened. That does not happen very often. But we are right now in an environment as close as we can possibly get to getting a bearish move, and that's what we've been getting prepared for. So again, if you take a look on a longer time frame chart, this is a 5-day 15-minute chart. You're going to see the sequence right here, 3, 10, 5, 7, 12. The last 2 moves, 7 and 12, they are actually a parallel move. The difference between the 12 and the 7 is the 7 opens up. You see this 7 move, it opens up higher in relation to the previous day. The 12 move opens slightly lower, very close to in relation to where the previous day ended. Let's review the VIX. It's low numerically, but we're noticing yesterday, April 15th, first day of a possible uptrend. VIX opens at 12.46, hits a high of 13.12, actually briefly went above 13, yes, and closed at the lows, however, 12.32. The question we were raising before the market opened yesterday was, will VIX close the bullish gap again? So the bullish gap that was created between 11.95 and 12.46 when it opened up, was this gap going to close, which would have been a bearish thing? But if the gap was not going to close, it was going to be a bullish thing for the VIX and, of course, a bearish thing for the market. So even though we did not close the gap yesterday, right? We actually, if you take a look at this, this is a classic move 11, guys, okay? And just phenomenal. Look at this pyramid right here, guys. So move 11 typically points to a further drop. So yesterday the gap was not closed, but surprise, surprise, today pre-market the gap was closed, and we hit that same level we established the previous day, or almost identical, right? It was 11.95 the day before, and now it's 11.93 so far on April 16th. So VIX continues the bearish spiral lower, just kind of like the TLRY stock. The chart almost looks identical. What kind of probability do we have for today? Well, as you know, move 12 is a highly repetitive move. It has a high probability of repeating itself, so we could easily get a move 12. We are getting ready for the market to reverse at any moment, so there's a high probability of a move 11 and a move 6, which is a sell-off going into the latter part of the day between 2 and 4 p.m. The key takeaways from today, guys, we're paying very close attention to the financials. Is the second day of reversal on stocks like JP Morgan, Goldman Sachs, PNC, is it actually going to materialize? If it is, that tells us that the market is running out of fumes and has very low probability of moving higher from here. Now, clearly, after the hours today, we have earnings from Netflix. By the way, I will post the video specifically outlining all the details on the Netflix trades before it announces earnings after 4 p.m. So I'll try to post that video at 3 p.m. and send you guys the link. Now, do not short stocks at the bottoms, short them at intraday highs. There is a big difference, right? We've identified that it's time to come in and start shorting stocks like BABA, the Chinese stocks. Well, there's a difference. I had some guys that I talked to yesterday that made close to 450% returns on shorting BABA as the market opened. Now, I had some guys that were just getting into the trade later in the day, and they didn't realize any substantial gains, the very small gains. Point at which you guys get into the trade is essential. So try to find the intraday highs in order to establish your short position on the put side. So, and clearly we are observing the reactions of the transports today. See if we're going to get a reversal there. Technology stocks will basically begin with Netflix. And our goal there is to identify, depending on what Netflix does, how the other thing stocks are going to react. So if the reaction is negative and the financials are reversing, we've got two key sectors without which the markets cannot advance further. So basically, we could be in a situation where we put the bulls in checkmate position finally, after all. And guys, if that is the case, this would be the ultimate time to increase your positions and move for a significant move lower in the market to the magnitude of maybe 3 to 5% literally within a week. So get ready. Some fun trading times are just around the corner, guys. Stay strong, have patience, make some great trades today. I'll catch you guys on the next video.